Eric Muadh, Muadh.com. In this video, I want to start the discussion on primary lines, and we'll get into that towards the end of the video. But I think generally speaking, it's a topic that I haven't discussed a lot, but I think it's time to start going into that topic. And primary line is pretty much very simple. It's pretty much based on a trend line that you can draw either in price. Let's take an example here. This was a 52-week low there, which means a 52-week low in terms of importance of a primary trend line tends to be suggesting that it is a serious low, a serious point in the chart. 52-week low. So any trend line based off this line where we had a 52-week low tends to be a serious breakpoint potential area. Again, we have another fresh low here. So any trend line break can actually lead to lower prices. We can see here that that is true. And again, here we had another fresh low. So any trend line break can lead to a big move. Today, being a Monday, we are looking at Pandora, which is gapping lower for the week about 9%. And also take a look at why that is the case. Take a look at the daily. And on the daily, we can see that this big move here for the day is because the RSI is back below 50, and that is no surprise. In fact, you can take a look at this nice up day here about 2 days ago. So this up day here, strong up day as the RSI jumped above 50. In fact, let's take a look at, let's go and narrow this down into a smaller range. So let's take a look at 3 months daily so you can see it clearly. This up day, huge, came as the RSI jumped above 50. Today we are getting the exact opposite as the RSI is jumping back below 50. So that 50 cross is what we are seeing here in display. And so the more we understand that stocks tend to react one way or the other, whether they are moving above 50 or below 50, can really help us explain some of the big moves in a stock. And sometimes it can, just by understanding that, it can give you pause not to overreact. But before we kind of start the discussion on primary trend lines, which we've already began here, just wanted to go back and take a look at a long-term monthly view for Pandora. This is a monthly chart, all data, and I always remind myself, or try and remind myself and remind you also, that it is always good to go back and check why at some point an instrument was on fire. Like why? And you'll always come to the same conclusion, or at least I do. And it is a very simple conclusion that every time we see this major explosion in price, it is because either the RSI was moving to all-time highs or 3-year highs, or the MACDs were doing the same thing. So we can see this move here during this period. The RSI did move to all-time highs. MACD moved to all-time highs for that IPO instrument. We have another breakout here after 1 month of rest, which is one red month down. We broke out again. So this breakout here for a fresh monthly breakout began during this period. So we're talking about this period here. And again, to a man, you can see that we had already moved to fresh all-time highs again. We actually even moved above 50 there, and you can see here that the MACDs also moved above 50. Even the primary MACD was also trading above 50 during that time period. So that's why the stock was on fire. In fact, you can even take a look at the next breakout, which was even higher, which was here after 1 month of rest, which is the minimum requirement for a monthly breakout, which corresponds with the RSI jumping here. RSI also for the first time jumping above 61.8. So all these are important things to understand. So the momentum was really in the stock, and now again we're talking about this time period here. So that time period corresponds nicely with this breakout here. The main MACD also moving to all-time highs. So lots of good things were taking place, and yet there was also another breakout after 1 month of rest here. 1 month of rest and then a breakout above that $28 area, which corresponded now with the RSI again, even here moving to all-time highs on the RSI, well above 69.1. So this is a sign of strength, not a sign of overboughtness. And we can see that if we take a look at that spike in the RSI and price, we're talking about this period now, we can see that again RSI at all-time highs breakout. We can see here the MACDs also moved to all-time highs. So we understand that on the way up, the stock did meet the minimum requirements for the ultimate MOA, the breakout, and hence it had a good showing over this period here in 2013. Right now, the question is, what about this period here, this high in the higher 30s during this period? How could we have seen a break? Now, number one, we go back to our primary trend line. Don't forget that this is a major low on a weekly closing basis. This is the all-time low for the stock. So any trend line based on this all-time weekly closing low price, any trend line that is broken based on this is a serious break. And you can see here, if we draw a line connecting the weekly closing, so draw a line, maybe even something, maybe even take this intraday low here. So intraday low, all-time low, we can even draw a trend line there, and we can see that even if you took that intraday low and the weekly closing, specifying the weekly closings, you can draw it something like that, and this connects with the weekly closing, that weekly closing, that weekly closing, so we can get a nice trend line. You can see that at the time we come and break down here in the $28 area, the stock has already broken down from a major trend line. So this is a major trend line. Why? Because it is based off a major low in the stock. Also, you can see that this is the lowest point in the RSI. So any trend line break based on this line, so a trend line break here corresponds with the move off the highs here in the 30s. So that was another sell signal on the chart based on primary trend line work here. Okay, and also we can also look at it from the price, but we can see here the RSI gave us a better view because the primary trend line break in the RSI gave us an earlier signal here in the mid 30s. Okay, now one thing also I would like us to be sensitive to is take a look at this movement here in the RSI. It went above 69.1 and back below it with uniform action, which tends to suggest that this was always going to be a trap. Okay, now assuming that the monthly charts was not showing you what you wanted to see, then we can take a look at the weekly. So the weekly, all data for Pandora, and we can see that on the weekly chart during the highs here, the RSI made a lower low. Ultimately, the actual high in the stock came here when the RSI failed to move above 69.1. Okay, so that was definitely stock running out of technical strength as it was making new highs. So if you combine the weekly analysis of negative divergence, resistance at 69.1 on the RSI, and then the monthly chart showing a primary trend line, and the primary and the RSI on the monthly charts showing uniform activity above 69.1 and back below it, you can see that there was some sign that the stock was actually looking a little bit tired. Now we can see here that this was the lowest weekly closing low. So any trend line break, for example, because this weekly closing low is associated with this RSI low, so we can draw any trend line here. So a break of this trend line is based on a primary trend line break. Okay, and I believe I'll send you a video link, either you've seen it by now, but that video link does go into the nuances of the primary trend line break. It's very simple. A primary trend line break is going to either be connecting to a 52-week high, so either a high to make the trend line or a low. Okay, that's how you know it's a primary trend line. Or if it connects to a 3-year high, and you can use either intraday or closing highs or monthly closing highs or weekly closing highs, just whatever. But as long as on your chart you can see that your trend line connects to either this, or if it connects to any all-time high or low. And what are these three things? So number one here is just one way to know that's a primary trend line. Of course, this doesn't have as much power as 3-year high or 3-year low, so that's the second one. And then the third one is the all-time high or low. Any trend line connecting to an all-time high or an all-time low is going to have the most significance. So in terms of power, you want to always respect trend lines that are connected to all-time highs or all-time lows. All-time highs is the most powerful, followed by 3-year lows or 3-year highs, and then of course short-term, a trend line connecting 52-week highs or 52-week lows is of importance. Got that? Okay. Now, so we can see here, either you can use the price or you can use the RSI, whichever seems to work best. And because this is a 52-week low, and this is the associated RSI point, we use that RSI point, even though in truth this here is a 52-week low for the RSI at the time, seems lower than this point. But in between this point and this point, this is more significant because it connects to the low. That makes sense? In other words, you want to take the level that is more associated with a price, major price high or a major price low. Hope that makes sense. Now, even on this chart here, I want to share something here. You can see here that the weekly chart broke out to all-time highs here, and that breakout in the weekly chart began this move. So even there we see that the ultimate more the breakout on a weekly chart could have at least sensitized anybody who was watching that there was something different taking place with the stock. So the RSIs and the MACDs were also moving to all-time highs during that period, this period here. So they did meet the minimum requirement before the stock went on an explosive run. Okay, so we're always looking for those types of outliers where a stock is moving out of a range, blasting out of a range. So again, we see here, and don't forget that this is some type of a wedge. So there was a wedge here, and at some point we broke through the wedge, which is coming off the highs here in the lower 30s. Okay, now what is also interesting is take a look at this primary trend line. This primary trend line break right there, which corresponded with coming off the highs, would eventually become some type of a major sell signal area right there. Now, I don't know whether it gets any more perfect in terms of uniform action than that. Uniform action above the red line, back below it, gives you that high. Now you can also see that the red line so happens to be at about approximately at about 61.8. So that red line there. So the fact that we went above it and back below it with uniform action was suggestive of a trap. And that's exactly what was a trap. The stock eventually has come way off those highs. All right. So the other observation is down the road, if the stock was to do well at some point, it would have to move above the primary trend line, connecting all-time highs. So this is now the most powerful primary trend line that the stock has, connecting its highs, all-time high. Because it connects the all-time highs, it means that at some point in the future, should you observe that the stock has moved above this price trend line, then that would indicate that there's some momentum to the upside. Why? Because it is based on a primary trend line that connects all-time highs in the stock right there. So that's just a side observation. Now, something else I wanted to discuss here is if you take a look at this right there, there's a slight node. Hope you can see that, right? And so there was a breakout here on hindsight. This breakout began this move off the levels there. If we draw a line that is generated from that point, a line that should look like that, something like that. In fact, let me change colors here because this line is instrumental in the current market. The line should look like that. And what you find that is in the periods when the stock is below, so let's do that. So let's just do that for the sake of understanding how market. In the period when the stock is below the blue line, which is based off the ideal entry point here, in the period it's below the blue line, the stock is on a downward trend. In the periods it is below the blue line, the stock is stuck in a downward trend. Even here, downward trend, downward trend. And again during this, in fact even this current, all this period here has been downward trend. So that line, as simple as it seems, has been giving you nice reference points. Here we can see there was a perfect entry on hindsight. It moved higher, and since then all the movement high in the stock over a period of weeks, here there was a reason for the stock to hold higher levels there. During this short period here, it held higher levels. It held higher levels here during this period. So a simple line, but the simple line is not as simple as it might seem. It is based on hindsight in an area where the stock broke out, and that breakout was very successful, and since then you can see it has held the stock together. In fact, if you take a look at the current market, we've come back to test that same line, and we are forming double top uniformity rejection on that same line here and again here. So this drop this week of about 8 to 9% as we begin the week is the stock respecting that blue line. I find those things very interesting or very telling. Okay, also we can see that on this weekly chart the stock is coming back now with this down week and showing rejection at the zero line of its MACD. Okay, and that zero line rejection on its MACD is a problem for the stock. Just like you can see here, uniform activity below zero and back above it for this movement. Once you move back above the zero line with uniform action, you know it's a good entry. Support at the zero line for support there. Support at the zero line for support, I believe, there. Resistance with uniform activity here for the highs. You can see that high is somewhere there, right? Uniform activity above zero, back below it, so that once it moves back that level, you know it's a sell, which is this period here. So, and here we are coming back to show uniformity. So I know a little bit of a digressing, and even here this low here beginning of late 2013 corresponds with the lows there before the stock moved from 26 to 40. So understanding uniform activity just tends to put us in a better light. Now there's something I forgot to mention here, and it is, and I did mention it, but I want to go back to it here. All these breakouts came after 1 month of rest. So we know that the minimum requirement for on a monthly chart is 1 month of rest, and this is a perfect example. 1 month of rest again during this breakout. So once it rests below that, the next month it breaks out is good enough because it has had 1 month of rest since recording a monthly closing high. Monthly closing high there, we had 1 month of rest below that monthly closing high, and then we get another breakout. So always when you're chasing something, it's always good practice on a monthly chart to insist that the stock moves above the previous monthly closing high after 1 month of rest. Now if we take a look at the stock now in the current market, and let's take a look at, go back to let's go 34 months of data, and you can see here as the stock is potentially about to make a move to fresh 3-year lows on its monthly RSI. The trigger point in an ideal situation would be when the stock moves below 9.72. Any movement below that 9.72 would be a fresh break, and that would suggest even lower prices. So anybody looking at this would say, okay, either I'm gonna watch for this, wait for it to move above 9.72 72, which is the all-time monthly closing low. Any break of that price would suggest lower prices, because that would meet the minimum requirement to the RSI moving to fresh 3-year lows, all-time low, no, fresh 3-year lows. And we can see that at least one of the MACDs, which is what we need, at least one of the MACDs is already trading at 3-year lows. Okay. And speaking of primary trend lines, just want to show you primary trend lines come in various varieties. It's just something you have to, just remind yourself to be on the lookout for. Here we have a major monthly closing low. So any trend line break based on that connects to that monthly low is a primary trend line. For example, we can see, maybe let's draw it. Let's take a look at this break here. Trend line that connects the monthly closing low there, this monthly closing low, and this one. Once we broke through that here, we dropped. We haven't been back to those levels. There's another trend line here. We recently broke through that. We can even draw another trend line connecting this weekly closing low and this 9.72 weekly closing low. Any break of that trend line would be a serious violation. So the trend line is a trap. Okay, let's take a look here at the daily. And on the daily, you can see that this was a 52-week low. A trend line break there led to a major drop. 52-week low, 52-week weekly closing low, trend line break there, primary trend line break recently, primary trend line break, now potentially another primary trend line break. So whenever you have 52-week lows, lines connecting 52-week lows, you know that the risk here is that the stock could easily break. Again, during this, so take a look at this period here. This was the RSI low. So you can draw a line there. Any trend line of that RSI is a primary trend line. You can see that was destroyed the stock off the highs there. Again, another primary trend line break, because this 52-week high in price connects to that RSI low. Once you break through the trend line, it's a primary trend line break. And even this 52-week low recently gives us a low there on the RSI. Any primary trend line break would lead to lower prices. Even currently, if we break that trend line, that's a primary trend line break. Primary trend line breaks are more actionable and they give better results as compared to lines that do not connect to major highs or major lows. And that's really the gist of what we are getting at. If you take a look at the S&P 500, which is actually one of the reasons why I began talking about these trend lines on a primary trend line perspective, is because the market recently made 52-week lows. So what I'm looking at here is any trend line break based on 52-week lows could generate a big drop in the market. And you can see that the associated low here is this low. So any primary trend line break on the RSI like there generally should suggest a big drop, because it's a primary trend line. It's not the only market doing that. Take a look at USO crude oil, which made a 52-week low here, and as you can see, this is now generating a weekly closing low there, or a daily RSI low. You can even connect it this way. So any primary trend line break here, we've seen a primary trend line break, and that is not a good sign. In fact, this is also another trend line here. So we are seeing primary trend line breaks in some of these instruments there, suggesting that we should not be too surprised that these markets really have a severe correction or pullback based on the fact that it's a primary trend line break. Okay, just understanding that sometimes can help us in understanding what markets are doing. Take a look at a 3-year monthly chart. This low here, the recent lows in the crude oil and the USO is 3-year lows. So we are going to one of the most powerful trend lines, which is connecting to 3-year lows. So go back to that daily, and what I'm getting at here is on the daily, this is a 3-year low minimum, which means it's a powerful trend line. Any break of this trend line, as it is doing now, or trend or break of the RSI trend line there, suggests that since it's a primary trend line, we should not be too surprised that it actually leads to a major drop or a major pullback. And now understand that while this is taking place, the primary trend line, the big picture, is bearish, because we are trading below 30.9 on the monthly chart. And don't forget that if we take a look at the weekly chart, I've been talking about resistance coming on this line here. Okay, and this goes back to, in fact, let's just do that for the sake of clarity. Take a look at this break. So here was a 52-week low. Eventually there was a trend line break. That trend line break was severe because it was connecting it to more than a 2-year low here, maybe even a 3-year low. So there's a trend line break there, corresponded with the RSI breaking down here. So the RSI breakdown was based on a primary low there, and since then this break has become a problem. The same break point has become a problem. Every time we stall back below the red line, we pull back significant to fresh lows. Double top rejection there, we pull back to fresh lows. And here we are showing potential for weaving ourselves above the red line and back below it, suggesting that there is a potential for fresh lows. And so we just go with what makes sense in terms of understanding the primary trend line breaks and also resistance, and also where the RSI is trading on the monthly. If you take all those things into consideration, we are looking at markets that could generally be pulling back based on primary trend lines, RSI breakpoint, and other factors that we are discussing in this video. In fact, even as far as gold is concerned, you'll notice here this was a 52-week closing low recently, and gold has had a fantastic spike. Nice major move. But because it connects to 52-week lows, any trend line break, so we have to figure out where the trend line is, and I would suggest using daily closing highs as best as you can. Daily closings, daily closing low there, a daily closing low there, and so I'm looking for the trend line, and I'll draw it like that. Oops, hold on. I'd probably draw it something like that. So on the price, we haven't broken a primary trend line. You see, you can actually even draw it differently by taking a look at, by connecting it to intraday lows. So there's an intraday low here, another one there, and another one there. Yet you still get this trend line. In other words, I don't want to necessarily force the issue by saying that this is the trend line. I know people do that sometimes, and we all do that. I do that sometimes, but sometimes we force the issue by drawing the trend line just there and assuming that that's the trend line. But the trend line doesn't connect to major lows on an intraday basis and a daily closing basis there. So that to me would not be a primary trend line. But while the stock was making fresh lows here, you can see that the RSI was making a low there, and the actual low on the RSI is here. So we can take that information, draw a trend line that connects those points, and it should look something like that. And I think we've already seen a primary trend line break in gold, which was off the highs there, and I think already setting potentially to pull back. That would be my view based on that. Take a look at the weekly, and on the weekly, a little bit of a problem here, because if you take the 52-week closing low there and this closing low, which was a little bit higher, the trend line is here, right? Because you want to connect weekly closing lows, right? Okay, and so on the weekly chart, I don't see a major trend line. If I take the intraday lows or intra-week lows, the trend line is here, because it connects the lows there, and close to that low. That's my trend line. That's a primary trend line. Okay, and the RSI trend line on the weekly would look something like that. So the weekly is not giving us trend line breaks. The daily is. All to say is that I want us to get deeper into this trend line situation, because, for example, if we take a look at the USO, I want to show you why. Even on the hourly, remember you can use this on whatever time frame. On the hourly, this was a 52-week low. So any trend line break on the USO based on that would be serious. So if we come here and break that trend line, it will be a serious break because it's based on a major low. The RSI low connected with this point is here, so any trend line break is a serious break, and we've already seen this break. So I personally lean to this market showing a pullback of a deeper kind because they are breaking primary trend line breaks, right? And if you really want to be like a little bit more picky and you want to connect the RSI lows and yet connect to this point, you can do another line, something like that. And again, what we see here is that the stock broke below that trend line and is coming back and is showing back test failure on that blue line. All of these things put together suggest that net at the end of the day, we are looking at markets that more likely than not, potentially, and it's just we're trying to find the odds, potentially markets that more than likely are looking to move lower because of the fact that we are closer to 52-week lows than we are closer to 52-week highs, suggesting that we are closer to making primary breaks on the downside as opposed to making primary breaks on the way up. Hope that makes sense. Eric Muaded, muaded.com, as always. Good luck, peace, and blessings. E-A-C-S.